YouTubers, Mike Martins here, Mike Martins channel. Australian housing market on track for the biggest downturn since GFC. GFC in Australia stands for Global Financial Crisis back in 2006 and '07. Very interesting what's going on in Australia, covering it for years now. Now, I'm going to say it now at the beginning of the video because I said it in my last video and the one before, but I'm going to say it right now. Australia is so far gone from the numbers that I'm seeing and what I've been reviewing and charts and pie graphs. I got a little bit of downtime the last couple of days. Nice quiet, some quiet time too. And if Australia went to 0% interest rates, they still won't get out of this right now. They're so far gone debt-wise per person. And it's just phenomenal. There's no way to pay this debt back. And I think the banks are starting to realize it, and I think they've been realizing this for a while. And now with the Royal Commission sniffing around for a while now, finding all this discrepancies and charging dead people bank fees, it's a nightmare. That's a whole story for another day. I'm going to see if I can get Andrew Baker on the show to give us a little bit of insight on what's happening with that on the ground in Australia. And wow, is it ever so out of control. So if Australia lowers rates to 0, it won't fix the problem. So they're going to be gearing negative interest rates, and they're going to be paying you to hold your money in the bank accounts. Now, you're going to start to see a lot of branch closures and ATM closures around, because once you remove your money from the bank, you're exiting their system. So unlike online money, where it's online or it's crypto, whatever, it's in the system. But when you remove cash physically, you're exiting their system. And they're going to start removing bank machines and closing down specific branches so people don't have access to removing their money as quick as possible. So you're going to be seeing that happen a lot. So keep your eye on the dial, and you'll be seeing what I'm talking about. So Australia's housing market is on track to experience a bigger than both the global financial crisis and the 1980s recession. National dwelling houses and units value slumped 6.8% since the peak of October 2017, driven mainly by sharp falls in Sydney 13.2% and Melbourne 9.6%, according to new analysis by property data company CoreLogic. If prices continue to fall at current rates, within 1 month of this downturn will be the largest since 1982 and 83, when Australia, along with most of the developed world, was in a grip of crippling recession. So here it is here. So there you see it right here, the different recessions laid out here from the 80s. And the one we want to kind of look at is this one right here. This light yellow one right here. This one right here. That's the one we want to look at right there, because that was the big one that a lot of countries missed. A lot of countries missed this big one, and what they did was they just artificially lowered interest rates, and that basically brought assets to increasingly astronomical levels. So bad on policy movement, because they took the wealth from the people by lowering rates to pay out the banks and all these companies and oligarchs and bank owners and all these people didn't lose, right? The bank people investing in banks made big bang, right? Some downturns are big and some are small, head of real estate CoreLogic said. Usually it's driven by economic conditions, but in this case it's more about credits. We've come off a brilliant period where we've seen strong growth, but the key is when things go up quite radically, they can go quite down radically. In many cases, the growth in the last 5 years has been unstable, and we're seeing a reaction to that now. A key trigger for the downturn is that lending standards have tightened, and the banks are more cautious to providing credit with prospective home buyers and particularly investors. During the GFC, banks were still prepared to approve loans as the federal government bank guarantee, where the government underwrote the bank, and to boost the confidence kept credit flowing, while the first home buyer grant stoked demand. So remember, they're going to try and implement and prop up this thing as long as possible. So they're trying really hard to pent up demand and massage the investors. So that's a huge problem here. The tightening of lending standards, especially to property investors, coupled with the increasing stamp duty for foreign investors, have combined to cause a sharp market decline. So sharp market decline now with the stamp duty, not collecting on the stamp duty that they were, and the government was just rolling in dough, and the GDP looked good and everything looked good. Now with the Australian proper coming to grips with affordability and not being able to secure anything in the market, and with now all these stress testing and all that's going on, it's going to make it real tough now. So when people can't buy, it's the first time buyers that make the difference in the market, because the first time buyers are completely bought out of the market. They're hooped. So now what are they going to do? Government, stay out, because government involving themselves, these economies should be running on autopilot. You should be having right now, we shouldn't be having this conversation, because this market should have crashed many years ago, and it should be in its second, third crash. But we created a phony asset bubble on the 2006, 2007 bubble, and that's what the problem is we're facing here right now. We didn't let things go to where they should have been, and now we're paying the piper, right? So let's keep going here. While the current downturn is dramatic, house prices are over the long term still show positive trend. Over the last 20 years, the median house price has seen 275% increase according to CoreLogic data. We've had the GFC, we've heard of recessions, and yet we're still seeing the market rise, Mr. White said. It's always a dip and dive. It depends on this severity. This time, the economy across Australia is more major centers and has been performing well. Unemployment is low, inflation is low, interest rates are high. There is a great period of growth, and there will be falls. So if you guys remember the video I did about that. But one commentator argues that the economic conditions this time around should make homeowners feel more confident than they may have been during the GFC and the 80s recession. Remember, GFC's great financial crisis. Not only is the economy strong enough to weather the storm, but the little partner Hutley told the New Daily that the analysis shows that wages are going up slowly, but still spending. So, again, they're trying to ease consumer confidence and tell people that they are still spending, and if people spend, the middle class has something to trade. But right now, it's not looking like that. When people say the biggest downturn it was preceded by the biggest upturn. In Sydney, for instance, we had houses going up 75%. So for the bulk of people who bought in the last 5 years are still ahead of the game, she said. Ms. Hutley stressed that the drop-off in investor lending is nowhere near the extent of what happened around the GFC, and that things are going in our favor. You know what? I beg to differ with the amount of capital flows coming in, and now with the Chinese retreating from Australia, retreating and trying to get their money back out of the country. I think it's a big problem right now, and with the amount of government propping and keeping this bubble going, it's going to be big. The biggest risk to Australia is not internal but external. China is the biggest risk at the moment, but even their governments are acting to bolster the economy through physical stimulus. Again, QE, quantitative easing, physical stimulus, is cash for trash, and basically printing off money to pay off their debts. And when you start doing that, it becomes a huge problem. Printing off money and quantitative easing is stealing from your futures. Your future's done. Your kids, you could write them right off. It's their grandkids now. They're selling out. I'm far less worried about the internal circumstances. We've got good employment rates and the income growth. It is slow, but it's growing, and that helps consumption. Things are going in our favor. I think they spelled things wrong. Wow, I caught that. Anyways, what is happening, people? Why is this happening? It is happening, guys. And now with all the government involvement, it's out of control. Okay, I'm gonna say this again. If Australia lowers rates to 0%, they still can't get out of this. I am sorry. I am very sorry you have to hear this from me. But you'll be hearing it from other people now. People coming out and saying it. Mike Martin's always on the scene, since talking about Australia since like 04, 05. Let me know what you guys think in the comments below. I'd like to know. And if you want to support my transmission, you could help me by sharing one of my videos. That's all I ask for, people. And let me know, comment below. Thanks for watching.